G'day guys, welcome back to the channel. Happy Monday. Welcome to a new week. Hope you're all doing well. Big shout out to all the fathers who celebrated Father's Day yesterday. Happy Father's Day to all of you. Now hang around guys if you want to find out how I approach my weekly and daily bias. We'll run through that in the charts. We'll jump to the calendar first and check out to see what's happening there this week. Alrighty, starting off with Monday, we have a no news day, followed by Tuesday, high impact news at 8:30, core retail sales. Wednesday, unemployment claims at 8:30, followed by the Fed talking about the rates, whether there'll be a cut or not. So keep an eye out for that. That should see some impact on the markets. So be cautious if you're trading that PM session. And followed by Thursday being a bank holiday. So there'll be no action on Thursday. And then Friday, it'll be back to business to finish off the week. Rightio, let's jump over to the charts. All right, so keeping an eye on the weekly here to start with. And remembering, guys, to grab your Apex evals with code Jimmy. Tradeify evals with code Jimmy Trades. Tradeify 30% off for the rest of the month, with Apex currently 80% off for the rest of the month. So some great deals there to be had. Be sure to grab your evals. And of course, if you want to jump onto Tradezella, you can get 20% off with code Jimmy Trades. It's a great platform for tracking your trading data. Definitely worth the investment. Alrighty. So on the weekly for NQ, what do we got? We can see here price respected this weekly SIBI, this bearish FEG here. We weren't able to close through that. And then last week we saw price close back inside the range of the previous week's candle. My interest level here, especially with price already opening and having quite a move today to the start of the week, is I'd be looking, if price wants to run out the highs a little bit, then looking for price to react off the 50% level of this previous week. Okay? Because this is generally our insight to order flow here, whereby we've closed back inside the range and we can anticipate price to be bearish from there. Now, where would our next level of interest be from a weekly perspective is all the way down here. We don't have any gaps. Wrong tool. We don't have any gaps or swing points until we get down to this level. The high would see us run out this high here, which is also low resistance liquidity. First of all, my area of interest is this 50% level of that previous week's wick. Let's drop down to the daily. So I do use the idea of IRL to ERL or vice versa, and then I combine that with these candle closures. And we can see here, this candle closure was back inside the range on a daily. So this was the, essentially a midweek reversal last week. That's the way I would look at this. Wednesday putting it in the high of the week, and then we sold off for the rest of the week. We could see Thursday was a little indecisive, and then Friday was definitely much more of a move there, although we did get some buying pressure back in late in the day. So looking at this devil's mark, we have a high level drawn liquidity here with no wick to the downside. So I'm looking at this and the fact we put in equal lows as a strong drawn liquidity. Not saying we'll get there today, because at the moment, there's a good chance we might run our previous day high or stay within the range. We might even stay within this range today, as we have no high impact news today. There's also very little wick to the high side here, so I'd almost consider this as a devil's mark as well, and potential draw on liquidity. So we'd be looking at this level at the moment as our potential draw. So looking for price to, run out the high before we look to see price run lower. So that's the daily idea at the moment. And we can see we are pushing through that 50% level of the previous day's candle. And we'll drop down to the 4 hour. Let's turn the AR off for now. Great product there, guys. If you haven't already got yourself the elite package from 2 Degrees team, you should definitely consider looking into that. Now we've got 26 minutes left on this current 4 hour candle. We'll see if we get a closure back inside the range. We do have a small gap here, so we did displace somewhat here after closing back inside the range of this candle. So we see this 1800 candle close back inside the range. Are we looking to run out this high on the 4 hour, which is also paired with this bearish FEG? At the moment, we can see that price has managed to push through that 50% level here of that bearish FEG, run lower, come back up, and we're testing that level once again. So we'll see how this candle, this 2 a.m. candle closes. That's what I'll be looking at this stage. Because you can see here, that is that same level on the daily that we're looking at. So we've got those equal lows here, which could act as a good draw on liquidity. Currently have session lows open. We've got relative equal lows through here as well on the 15-minute chart. And if we have a look, we have put in a 15-minute change in the state of delivery here, and we've respected that as well with a bearish FEG, so that's displacement there too. All right, we do have a stop hunt there. ES put in equal highs or just swept the high by the looks, and similar profile YM with an SMT here as well. So this could be definitely indicating potential move lower. All right, you can see that SMT there. How do we look on hourly? Hourly still looks like we could be bullish. We haven't flipped. We're respecting this bearish, this bullish FEG here at the moment. We did close through this one here. As I said, I would like to see the high swept here first before we start to move lower. And as we come into New York Open, we just reassess. We've still got a couple of hours to go before that happens. So we've got time to reassess our position before we get into the Open. Let's move over to oil now. Oil had a wallop of a week last week. It's sad that, we have this conflict, which obviously generates this bullish move here on oil, but that is how the markets roll, and hopefully the conflict will end soon enough. Looking at this weekly chart though, we do have all this relative equal highs stuff happening, really all the way from over here. We can run that out. And we have a change in state of delivery here. You could even look at it from this level here, because we did get displacement through this level. This would be a bullish breaker on the weekly. And whilst we haven't swept out previous week high yet, that would be the initial draw for me. Seeing price respect the equilibrium of the previous week's range is what I want to see. So something come down like this. Okay. Let's drop to the daily. Similar deal. We haven't swept out previous day high, which was the weekly high. We are pushing through that 50% level at the moment, but that's not to say we won't just wick through this and come back up and look for that previous week high. This is quite bullish through here, obviously, as well. So I'd like to see price continue that run on the hourly. So we immediately gapped up. We filled that gap now. We are holding this bullish FEG right now. It's pretty ugly, this price action at the moment through here. So with all this low resistance liquidity built up here, I think there is a good opportunity there for price to want to turn around. We might even see, we're into this large 4-hour bullish FEG. You could see one of these lows swept out before we see a reversal. So we could see price do something like that. All right. So that's where we're at for oil. Let's have a look at gold now. Let's go to the weekly. Okay, a strong week last week. We've swept out previous week high now to start the week off. The new week, we've swept out previous week high with a lot of room where we can move down to this 50% level to test that level out. We are bouncing off the 25% level there at the moment. On the daily, this would be a level that I'm looking at, this order block, which is possibly close to that equilibrium as well. Yeah, it's not far off that at all from the weekly. And same with that, if we're going to look for price to run lower, we want to see price respect this. If we're going to run lower and get a bounce from here, respect that level, and we can come as low as this 0.5 without with a wick through, and still look at that as bullish opportunity off of that level. I am first and foremost looking for price to bounce off of here or respect the 50% level of the previous day's range, which we are at the moment. Let's clear that mess up. You can see we have swept out all these lows here. Swept out all these lows into this bullish FEG. We have a breakaway gap here. Price has come down into this gap and respected that. And we do have loads of low resistance liquidity through here. So what I would like to see, in fact, would be a move lower to sweep out essentially these relative equal lows now, and then push back higher and sweep out all this low resistance liquidity. So that would be my ideal setup for gold. Jumping over to Euro futures. So we did sweep out this weekly high, but we didn't close back inside the range of the previous week's candle. So, we're We're potentially going to keep moving higher here. To sweep out previous week higher. That's the low hanging fruit. That's where I'll be looking first. Got equal lows in here. Would be nice to see a sweep of those lows and then move higher. So we could see a couple of days lower, midweek reversal, and then look to move higher. And we are putting in low resistance liquidity here at the moment too. On the hourly, we had a change in state of delivery here with a bullish breaker that has been respected. Okay, we are respecting this level. We had a nice move back off of it, off of this change of state of delivery too. So I do like that. Closure through this level here would certainly lead to higher prices. At the moment, we've had this little move, this nice displacement, and this nice push off the change in state of delivery, but we've just slowed down slightly here. Potentially see a sweep. If we move lower into there, then we could see that price run out these highs. There we are on 6B on the weekly. A little bit indecisive last week. Did close back inside the range after sweeping out the high there. So we gapped down and then we immediately, well, not immediately, but we gapped down today. We'll check it out on the lower time frame, move lower, and then we are getting a push higher here off the 50% level of the previous week's, of the previous weekly candle rather. A little bit of a range here on the daily, respecting this opposing candle here at the moment, so we can see that price came down and we've twice come down to that now. Open low, looking for a high close candle. If we don't sweep the high, maybe we'll just stay inside the range here. All right, let's jump over to Bitcoin quickly. So this move did play out. Looking at the daily here, we came down into this level and a nice move out of there. Prices found some support here. They had a candle closure, a hammer there back inside the range. What we are faced with at the moment is this daily bearish FEG. We want to see price close through that because we do have these relative equal highs here. In fact, there's equal highs of these two daily candles here. I want to see price push through this bearish FEG, and that'll hopefully see us push higher. Ethereum, similar deal. Want to close through this bearish FEG. We do have another one here to fight through as well. You can see that the opposing candle here, we found support off of that, and we are starting to push a little bit. We can see here as well, this is a perfect example of that insight to order flow that I talk about all the time. Candle closure back inside the range. As soon as I saw this last Wednesday, I forget, I was talking to someone, a buddy of mine, I think, and I was on the phone with them and looked at this at the exact same time. And I said, oh, I think we're going to see lower prices for Ethereum. And you can see exactly what happened there. Price just moved lower for the rest of the week. All right, guys, let's wrap it up there today. Now, I'm planning on doing at least another video this week. I am heading away on leave on holidays for a few weeks, starting from Friday. Obviously, Thursday's a bank holiday anyway, so we won't be trading on Thursday. I will be likely not trading Friday, but for the next few weeks, I'll be trading remotely. Hopefully Starlink works well because I'll be using that for the first time. So I won't be able to bring you my regular videos for the next few weeks, but I will be posting in Trade Foundry and on Twitter or on YouTube. I'll be posting. So there'll be no videos, but I'll do my best to post as much information as I can so we can remain consistent and provide you guys with as much value as possible. All right, guys, take care. Have a fantastic Monday. We'll see you over in Trade Foundry. Bye for now.